Well, hello, welcome to Passive Wealth for High Tech Minds podcast. There are lots and lots of IT professionals who work in the industry. These IT jobs are so exhausting mentally, there isn't much time left for such folks to make clever decisions about their investments. Most are unable to put their money in the right asset classes. This is Prashant Kumar from iRealty Gains. I have worked in corporate America in IT and in business organizations for 25 years. My goal is to educate IT professionals like you about the benefits of passive investing. I will be passing my knowledge and will bring guests who have done very well in their careers and can explain the process and advantages of passive investing. So, let's begin. Guys, this is Prashant Kumar from iRealty Gains. You are here in yet another podcast for Passive Wealth for High Tech Minds. Today, we're going to talk about what should we be talking to our investors, right? What should be the flow of our deck? So I will probably divide it into four components. The investment deck that we present to our investors, how we should establish stronger relationship with our investor. Number one, create a sizzle to begin with. You have to, like create a sizzle when you go to a restaurant, they bring some food for somebody and everybody looks at it. You have to create an environment. You have to do some ice breaking. You have to tell, there are a lot of people out there, who have money and all they know about stock market and they end up losing their shirts all the time. Real estate is proven to be an asset class which has built world's wealthiest people's fortune. You say something like that and you build a rapport with your investors. Typically real estate deal produces 7 to 8% annualized cash on cash return, and with some split at the back end. Those passive investing deals are proven to create time freedom for busy professionals and say that, what is your project? It is in it for the investors, from the beginning. If you tell investors in the beginning itself that this is a recession resistant, it is hedge against the inflation, and this asset class, whether it is multifamily or assisted living, this asset class is going to ride the recession. As of right now, every investor has recession and inflation in their mind. If you address the biggest elephant in the room first, then investors are listening to you. So you tell them we have been working in this asset class for a long time, and we feel that if we invest into it right now, which is not a high price, obviously we bought it a couple of years ago, or we have been working on it for a couple of years, and this is going to create so much value for our investors that even we are investing so much money in this deal, it will create 10% return or 25% annualized, or whatever your returns are. You share the good pictures of your property, that you are buying, and that should be in the beginning. You have addressed inflation, you have addressed recession, you have given them what are the returns that investors are going to get, and you did that in the beginning, and you have told that real estate is going to create most wealthiest people in the nation. So you are kind of telling the stories. Now you have gotten their attention, but now you have to repel. So you have attracted, now you need to repel. Now you tell them, the real disclaimers. In real estate, everybody lies because nobody knows what's going to happen, right? So you tell them, we are projecting conservatively, but if you are looking for a quick fix, quick flip, this is not for you. You will get the benefit of illiquidity because real estate is illiquid. You will get the benefit of illiquidity over a period of time, but you will not get returns right away. So you have to tell them it's not going to be a quick fix. If you are here for quick fix, you are wasting your time. So you have kind of pushed some people away. You have told them, those who say that people don't lose money in real estate, they are probably telling lie, because people do end up losing money in real estate also. It is just that, how conservative we are in doing the business that makes the most sense. So you attracted and then you repelled. You created the sizzle, you attracted, and then you repelled. And now comes the third portion, which is very important. You establish your credibility. You tell about yourself. What have you been doing in real estate for so many years? And what has been your track record? Let's say, for us, we have been doing real estate for 7 years. Our returns to our investors have been, 25 IRR over the last so many years. Of course, past results are not future guarantee. And at the same time, you never tell them your minimum. You tell them if you were to invest 500,000, you will probably end up making this much money every year. So you tell them those numbers, and when people like to be flattered, right? I mean, you say 500K, maybe they cannot invest 500K, but you at least start expecting, because the moment you say 100 or 50K, your psychology starts going there. So you start with 500K or a million and see what people say. You say, if you invest 500K or a million with us, you will end up making this much money, and then sit back and relax. It's like in the subconscious of the investor, you have already told what you want them to invest in your project, right? And then show them some pictures of your project, basically. Once you have done that, now comes your business plan. You tell them, listen, we bought this property at this price, or we are going to buy this property at this price, and this is what we are going to spend over this much time period. This is going to be the rent bump that we are going to achieve. And again, you tell them the returns. And because of these rent bumps, because of this business plan, we are going to make this much money, and investors will make this much money. I think we should not have 100K example. We should really have $1 million example in our slide deck, so that people feel that, get flattered. Whether they invest that much or not, it's a different story. So you ask them psychologically to invest more with you, right? So you have done all your part. Now it is call to action. On the webinar or in the meeting itself, you say, how much do you want to invest? Ask for commitment, create some sense of urgency that we are filling up very fast. We have only few spots available, and say how much investors can invest. If it is a webinar kind of thing, you should have some sort of action code or QR code, a landing page, so that investors, can schedule a call with you, or you schedule a call with investors pretty quickly. All right. In the end, basically the conclusion of this podcast is that, the talk with these investors should be as human as possible, right? We have to be what we are exactly. We don't have to pretend to be someone else. We discuss family history with our investor. We try to know more about them, right? The more you know, the better it is for you as equity raisers. All the information has to be conservative, and some negativity will flush out the weeds. So you don't end up wasting your time. Your time is valuable. The more hands you shake, the more money you make. That's what they say in real estate equity raising world. The more hands you shake, the more money you make, right? So you better spend your time on things that produce results than the things that cannot. That's all I have for tonight or today in this podcast. This is Prashant Kumar from My Realty Gains. You are listening Passive Wealth for High Tech Minds. Until next time. Thank you so much for listening to our podcast. As usual, you can reach me via my website, www.myrealtygains.com, and via email, prashant@myrealtygains.com. I would love to hear from you and talk to you about specific needs you may have. Please schedule an appointment with me via my website, again, www.myrealtygains.com. Stay tuned for next podcast. This is Prashant Kumar signing off for today.